A financial apocalypse looms. Are we headed for another 2008? It's a chilling thought, but the echoes of the 2008 financial crisis are resonating once again. With many key players from that era having moved on, it's easy to forget the hard-learned lessons. But here's where it gets controversial. Are we repeating history, and if so, what can we do to prevent a similar catastrophe? Bank of England Governor Andrew Bailey has sounded the alarm, warning of potential parallels to the 2008 crisis. The collapse of two U.S. companies, First Brands and Tricolor, has sparked widespread concern, especially among those with selective memories. Bailey's concerns revolve around shadow banking, a term referring to the private credit market, where money managers lend to businesses outside the traditional, regulated banking system. This time, the focus is on firms like Tricolor, headquartered in Texas, which specialized in selling used cars and lending to low-income, often undocumented immigrants. With 68% of its borrowers having no credit score, and over half lacking a driving license, the risks were clear, yet major banks like JP Morgan and Barclays still provided funding. Barclays CEO, C.S. Venkatakrishnan, has acknowledged the need to learn from this exposure, stating, "We take our credit risk management very seriously." But the question remains, why was Barclays involved in shadow banking in the first place? The answer lies in the potential for significant financial exposure. Barclays is reportedly exposed to £20 billion in private credit, with a large portion in the US. This amount is substantial and could lead to a contagion effect, similar to what we witnessed in 2008. The worry extends beyond banking, as insurance companies and pension providers have also entered this market, lured by the promise of short-term gains. Shadow banking is often touted as a safer alternative to the stock market, but it relies on the prosperity and honesty of the companies at the end of the chain. When those companies falter or engage in fraudulent practices, as alleged with Tricolor, the entire system is at risk. The International Monetary Fund, IMF, shares these concerns, highlighting the largely unregulated nature of this industry and the potential for widespread ripple effects. Jamie Dimon, CEO of JP Morgan, has expressed anxiety over the emergence of more cockroaches in the financial system, a term reminiscent of the locusts described during the last crisis. The response from regulators has been cautious, as they strive to avoid panic and bank runs. But the worry is palpable, and the need for action is clear. We cannot afford to repeat the mistakes of the past. As we navigate these troubled waters, it's crucial to remain vigilant and learn from history to prevent a potential financial apocalypse. What are your thoughts on this matter? Do you see parallels to 2008, and if so, what steps do you think should be taken to mitigate the risks? Let's discuss and ensure we don't sleepwalk into another disaster.